As convention would have it, this should be our series finale. Peng.guo and I are happy to provide the content and context for the second largest economy. It may feel like the last 26 weeks, China's had an outsized headline barrage, but in reality, if you're looking, there's always plenty happening. And that's been our focus for 6 months now. We're not bullish or bearish on any asset class or sector at any particular time. We're just trying to help institutions and high net worth individuals efficiently allocate to the fastest growing large economy in the investable universe. And with that, we're going to kick off show Z and circle back to RMB dollar and China sovereign rates. You can always be sure that when you're not hearing about something, it means the loudest voices were wrong. So let's look at RMB, and we're going to put a chart up. After a 10% appreciation from May 2020 to May 2021, so 1 year, you had 10% appreciation renminbi dollar. The renminbi was forecasted to continue to maybe even a 5 handle. That didn't happen. It's actually reverse course, and there's been some renminbi depreciation in the last few weeks. For context, the currency is sitting exactly where it was 5 years ago. And PBOC Governor Wang Yi continued to encourage lending through the end of 2021, and the central bank would stabilize the support of credit. Thus, we have the beginning of a divergent Fed and PBOC, as Jackson Hole hinted this week. So you have two different paths for central banks.
I think from the RMB and the US dollar chart is actually very clear. So in September 2019, as well as the May 2020, it's obviously the double hit on the top of the chart. And then after that, this is have the 8 months appreciation. So it's very clear. And then dropped a little bit. And then they have get to the bottom, and right now it looks like it has some bottom volatility right there. So probably the exchange rate is relatively stable at this place for some time. I think a lot of the uncertainty, like the big market events, is already reflected into the exchange rate. The next time, probably much wait for after the COVID-19 and see how the global economy and both countries' economies performance. I think from the July's statistics data, China's microeconomies, all the indicators looks pretty bad. So I don't think it will support continue appreciation process.
Right. You sent me that chart. So, of those economic indicators, which one of those looks to you to be the most suspect, or maybe even the weakest?
It looks like the GDP. That is the most important things, as well as the PPI and the CPI. The gap of them is looks like is a pretty unique. As totally different from the historical. So it's really reflect the micro economy has some problem. So it's a very real situation to see all the indicators looks bad.
Right.
Sometimes it's always good, sometimes it's bad, but this time it's a very unusual situation.
Right. So we're going to be, if you can translate that into investment thesis, you're probably a little bearish in the short term.
That's true.
Yeah, probably a little bearish in the short term. Okay, well, I think that's a good place to leave that, because it works well into our next section, which is policy. So today on policy, we wanted to go back to some of the levers that the government can use to affect change that they want, because there's a lot of criticism of the Chinese Communist Party, but they do things. It's not that they sit and wait. They actually try to implement policy, and sometimes that's great, other times not so great. So most recently, this 996 concept. This is the the shortened version of 9 a.m. to 9 p.m. 6 days a week in terms of the work week. And Jack Ma trumpeted that as the work ethic of Alibaba. Well, let's fast forward to today, and Jack seems to be indisposed these days, and it's clear that 996 is out of favor from the top down. We discussed what shared prosperity means last week, and perhaps it means just simple math. Instead of one stressed out 20-something working 72 hours a week, we'll just split the job in two and have shared prosperity, right? Well, this may work well on the factory floor of the farm, but it's horribly inefficient writing code, creating financial products, or dare I say, consulting. It's easy for people to chastise the CCP as being inflexible and discount these levers, but the government is going to push and pull and perhaps break some things or just claim victory, but change is constant. Prime example of this is employment contracts. Every full-time employee on the mainland must have and must be under annual contract at a minimum. Are these perfect? Absolutely not. Are they enforceable? Probably not. But every full-time employee under contract at every state-owned and private company, that happened. Compliance is high. So I'll give another example, which I talked a little bit about last week, which is property taxation. It's ripe for shared prosperity. Second home ownership is high, and that looks particularly vulnerable because the government has shown no compunction about investors suffering some paper losses. So it would be easy for them to implement such a policy. On the other side, some of these policies are definitely going to sap creativity and innovation.
Yeah, I think personally, 996, the government official response to that is break the law.
Yeah, now it's illegal. It's 996 illegal.
That's true. But in reality, is still many people want to join their big companies to get a 996. That's the situation. I see, from the statistics, this is even in the financial industry, this is 1 million students graduate every year, but the new job is 150,000.
Yeah, that's a lot of unemployment for graduates.
Yeah, that's the hard situations right now. So no matter what kind of the solutions or policies proposed, you have to make this fundamental situations in the economy. I think right now a lot of the policies is getting changed and moved. I think right now probably is the cleanup time, because of the 30 years high-speed development. China accumulated a fortune, but also accumulated a problem. So, and the people know the problem, suffer the problem, and right now, the government try to get a solution to clean up those problems. I don't know the policy is all successful or not. Maybe some would be successful, some maybe or not. But in reality, is a lot of the industry get a huge impact. So, and people have to study the micro policy and follow the CCP's directions and put the resource to the long term could grow the industry. So yeah, otherwise, if you like the short term, is the capital is always want the short term money. That's the China's characteristics. They don't think too much about long term, and there's only government that force those capitals move into the low profit, but have the high growth in the long term industries.
I mean, you brought up a good point about young graduates, right? If the social contract is broken, whereby you go get a great education and 9 out of every 10 or 8 out of every 10 of your colleagues, your high school classmates, can't get a job, people are gonna get ticked off. So this is something that the government needs to address, because private enterprise is going to go about their 996. So if this social contract is broken, there's got to be a solution. I don't know if there's a market-based solution or a policy-based solution, but there's clearly something broken.
Yeah, I think employment is still the top goal for the government. I think same thing in the United States.
Yeah.
The efficiency, what else they can put aside. Otherwise, that cause a huge social problem.
Yeah.
And right now, this couple like the medical or healthcare industry, and housing industry as well as the education. So they are pretty high for the young people. And they cannot afford it. They cannot. They just throw off the tower and lie down. They don't do nothing about that.
Yeah, exactly. I mean, I had lunch with a friend of mine this week. He asked me about the medical system in China. He said, "Oh, if everything's so great in the great, socialism with Chinese characteristics, shouldn't healthcare be easy, free, and accessible?" And unfortunately, it's pay to play. A lot of the healthcare in China is pay to play, which is a horrible outcome. But some of the
they
reality.
try to squeeze out the middle companies to make the money. But unfortunately, some of the producers also get affected in the healthcare. Healthcare is the education. Healthcare is the easy one, and the real estate industry, this is the hard one. I think right now they cannot let the industry drop it, and they obviously it cannot continue to grow it. Right now the reality is the liquidity get down. So the liquidity really means make the speculations or whoever own multiple empty houses, they cannot make a profit for that. So this is really economy is the ecosystem. I don't know what's the consequence for that. It's a huge topic.
Yeah, well, I mean, real estate is the first investment most wealthy people make. It's also the second investment most wealthy people make, even before they look to the stock market or the bond market. So this is cultural as well. People buy real estate. It's no secret, because it's been predominantly a one-way trade since the advent of ownership of real estate in China. So it's been a one-way trade. So people buy real estate, and that's what people aspire to do. So you're not going to stop that. Yeah.
Yeah, I think, and also China, I see some of the news. It was said almost 100 million room or houses get emptied in the market. It's not get fully used, just wasted the social resources.
Yeah, well, because people look at the yield. The rent yield is 2 or 3%, but then they look at the capital gains on the property over 10 years. They're like, forget it. I don't want that 2% a year. I'll just take my double in 10 years, which is 8 or 9%. So I mean, that's the way people look at it. They don't look at the yield. They just look at, I'll keep it empty, and then when somebody wants to buy it, I'll flip it. So
that's why China real estate sector's performance pretty bad, and probably worse the sector in the market.
And also, I do think it's ripe for this property tax or second property tax. They've gone into the real estate market because, look, Beijing looks at real estate like the U.S. looks at stimulus. It's always good. Real estate will solve all my problems, and then it'll create new problems, and then I'll use real estate to solve those problems. It's this, constant spiral or downward. But it's too big to ignore, and that's why policymakers are going to look to it. Yeah, just too big to ignore.
I think, and the government try to propose many new ways, like for the housing solutions to the market. Let's see how that works. I think if that really works, that will be very helpful for the young people.
Yeah, I'm going to bet that there's going to be new reforms, and then I'm going to bet that 12 months later there'll be new reforms. That's what I'll bet on. Well, this brings season 1 to an end. 26 episodes. So happy to have you listening, have you subscribe, and be a part of this journey. We'll continue to produce the content in season 2. Look forward to seeing you all then. Thank you.
Thank you.